This is the Crypto Mile. We are joined by Peter Schiff. We're going to discuss the convergence of a currency and sovereign debt crisis in the US, what this means for fiat currencies worldwide, and also, is gold or Bitcoin the answer to protecting wealth long term? Peter, welcome to the Crypto Mile.
Thanks, Brian. Nice to be here with you in jolly old London.
So let's actually begin with talking about the raising of the debt ceiling. Is the US facing a currency crisis as well as a sovereign debt crisis? And is the dollar on life support?
I think the answer is yes. The only question is when. I mean, clearly we're not having that crisis right now because our creditors, for whatever reason, still maintain confidence in the future of purchasing power of the dollar. They still have confidence in the Fed. The charade that we just went through over the debt ceiling should really be shattering that confidence because, number one, we spent months threatening default, basically letting our creditors know that we may in fact default and that they were low man on the totem pole. Because during these discussions of raising the debt ceiling, nobody said we're going to prioritize bondholders. They basically said if we can't borrow more money, the first thing we're going to do is default on the money we've already borrowed. And so that is an official admission that the US Treasury is running nothing more than a Ponzi scheme. We're only going to pay back the money we've already borrowed if we can find new people to lend us more, right? We're not going to just tax people to make good on these commitments. We're going to rely 100% on new borrowers. And so that is the pure definition of a Ponzi scheme. The only difference is it's being run by the government instead of a private citizen, but it's still not going to work, right? Ponzi schemes can't work by definition. But then the other problem with this is the rationale, right, or the pretense for the debt ceiling increase was that America always pays its bills and we need to raise the debt ceiling so we can keep paying our bills. Well, it's actually the opposite. The reason we have to raise the debt ceiling is because we never pay our bills.
Let's talk about alternatives to actually just keep on printing money, keep on going to the bondholders. And you spoke about like that brinkmanship in the lead up to the debt ceiling. That did the US no favors at all. If there are cuts in government spending, what sector gets cut?
Well, obviously, when you're running $2 trillion a year deficits, which the US is, you've got to make that up. You've either got to cut spending or raise taxes. Now, personally, I would like to see everything through spending cuts. But to the extent that we need additional taxes, it should be through a consumption-based tax, at least in the United States, not higher income taxes, but some type of value-added tax, sales tax, or something like that, that isn't as economically destructive as taxing work and production. You want to tax consumption. But we really need significant across-the-board spending cuts, and not just fraud, waste, and abuse. We need to actually cut real spending now, immediately and significantly, including things that are off the table, like Social Security, Medicare, government pensions. We have to cut defense spending. And there are a lot of agencies and departments that I think can be completely eliminated. A lot of spending can be cut. Because if we don't do that, there is no way that we can handle this debt. In fact, even if we do that, I still don't think we can handle it without a restructuring of the debt, which means that we have to tell our creditors honestly that, we owe $32 trillion. We cannot pay it back. The taxpayer just simply doesn't have the resources to make good on these commitments. So we need a restructuring here. We're not going to give you 100 cents on the dollar, maybe 50 cents on the dollar. I don't know what the number is.
Okay.
But owners of US Treasuries around the world need to experience some pain along with everybody else, because I don't think the American voters are going to put up with the government saying, you're not going to get the Social Security benefits we promised you, but the Chinese are going to get 100% of what we promised them on their treasuries. I think everybody is going to have to take a haircut to avoid a crew cut, and that would be inflation. Because once you recognize that the debt is unpayable, the only question is how do we, default on it or restructure it? We can do it honestly, the way I would like to do it, which would actually be better for everybody. Or we could just print money until the money has no value and we have runaway inflation, in which case our creditors will actually be worse off. I would rather get back 50 cents on the dollar, but have the dollar maintain its value, than get back all my dollars, but have them lose 90% of their purchasing power or more.
If we're looking at that, and we keep on going down this road, down this trajectory, is hyperinflation down the line? Do you think that could be?
Well, if we stay on this road, then hyperinflation is a foregone conclusion. It is an absolute certainty. So the only way to avoid hyperinflation is to get off the road. But the question is, when do we turn off? You know, how long do we wait before we change course?
So, like hyperinflation of Argentina and other countries around the world, that means something to those citizens. But hyperinflation, the US dollar, well, that's global.
Oh, yeah.
What does that look like?
I don't know. We've never seen it, right?
Yeah,
We haven't had hyperinflation in a reserve currency, like the U.S. But I do think that the most pain will be felt in America, right? Because Americans have benefited dramatically from the dollar status, because it allows Americans, of course, I'm an American, but it allows us to live beyond our means, because we don't have to produce to consume. We can just produce money, which costs nothing, that we just create out of thin air. And we can exchange that paper money for the real goods that are produced by hardworking people around the world in factories. You know, and those goods, you know, aren't created out of thin air. They take real resources, land, labor, capital, things like that. And those resources could have been used for something else. Instead, they were used to produce stuff for Americans. So we get a benefit. We also get to borrow money cheaper, because we get to borrow what everybody else saves. Americans don't save anything. So where does the credit come from? It comes from the rest of the world. So when the dollar crashes, that's actually going to be a net positive outside the United States, particularly the emerging markets, because I think the people there have borne the lion's share of the burden of propping up the U.S. economy. So I think they have the most to gain from the crash of the dollar. But of course, you know, there are people all around the world that own a lot of dollars,
right, yeah.
You know, and so to the extent that they're overexposed to the dollar, they're going to experience some losses. So just like when we had the financial crisis, it wasn't confined to the United States, because people in Sweden, for example, owned mortgage-backed securities from the United States. So, you know, we've spread the bad paper all around the world. So it's going to be felt all around the world. But I think on balance, it's going to be a positive outside the United States, but a huge negative, at least in the short term, for the United States.
So yeah, that just brings us to the combination of restructuring the debt, going to international bondholders of US treasuries and saying to them, we're going to have to restructure this. You're going to have to take a hit. Internally, you're going to have to take a hit. If this doesn't happen, we could see hyperinflation. But then let's bring in what happens with gold, what happens with stores of value in this environment, in this macroeconomic environment.
Well, I think no matter what, gold's going up. I mean, obviously, under hyperinflation, that's when it goes up the most.
Yeah.
And I hope that we avoid that. I mean, I own a lot of gold and gold stocks, so I would personally benefit as an investor from that. But I don't want that to happen. You know, I would prefer an alternative course. But even devaluation default, I think, is going to be bullish for gold. Because I think gold is going to emerge either way as the preeminent store of value safe haven. And I think that the dollar's status as the reserve currency is going to be lost.
Okay.
And then the question is, what is going to replace it? And a lot of people think that the dollar status is not at jeopardy because they don't see a viable alternative, but they're looking in the wrong place. They're looking at, sterling, or they're looking at the euro, or they're looking at the yen or the RMB, and they're saying, hey, those currencies aren't ready to be the reserve. And I would agree.
Right.
We don't need another fiat currency to act as a reserve. We need real money. We need gold. Gold was the reserve for all currencies prior to Bretton Woods. And even after Bretton Woods, when the dollar was the reserve, it was only the reserve because it was backed and redeemable in gold. In fact, the dollar was defined as a weight in gold. That's why it was considered as good as gold. So we've really only been on a fiat standard since 1971. Yeah. So, about 50 years, a little bit more.
That was only meant to be temporary, Nixon's gold shock.
Oh, initially, sure.
Okay,
sure.
So it still could be temporary, only it lasted years.
Yes. Well, if we were to go back on the gold standard, the question is, would the world trust us? Right. Because we already screwed them over once. In fact, when we talked about the debt ceiling, and everybody said America has never defaulted on its commitments, that was a lie, because Federal Reserve notes were obligations to pay gold. And up until 1971, if you were in Britain and you had $35, you could get an ounce of gold. That was the commitment that we made to the world. And then we defaulted on that, and we gave them nothing. It wasn't just that we gave them 50 cents on the dollar, right? Or we didn't say, okay, we'll give you half an ounce of gold for your $35. We'll give you no gold. It was a complete default. So I don't think any one country should be able to issue a reserve. I think that the real reserve should be gold, and we should all be on a level playing field. If you want gold, you have to earn it. So either you have to mine it or you have to produce something that you could trade for the gold that somebody else mined. But we need an honest monetary system that keeps governments in check. Because if we had sound money, we wouldn't have all this inflation. We wouldn't have all these budget deficits because they're not possible under a sound monetary system.
So are you suggesting multiple gold-backed currencies across the world?
They should all be gold-backed.